Bitcoin ETFs. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Bitcoin extending its losses this morning after it fell below $40,000 for the first time since early December yesterday. By noon Eastern, Bitcoin slid more than 2% and traded above $39,000, but at one point traded as low as $38,800. This latest correction is all part of the Sell the News event analysts had been expecting post-ETF approval. In fact, experts tell CNBC that Bitcoin could fall further before it turns higher, but new all-time highs might still be on the horizon in 2024. Now, looking at the broader market, the recent sell-off also extended to Ether, which fell more than 5% in the past 24 hours, and Solana sank by around 2.8%. All right, turning to spot Bitcoin ETFs for our main story. I sat down with Matthew McDermott, Goldman Sachs Global Head of Digital Assets, to discuss these new products. In the exclusive on-camera interview, McDermott breaks down what the approval of these ETFs means for Goldman Sachs. He also says the bank is now serving as an authorized participant for the majority of spot Bitcoin ETFs trading in the U.S. A lot has happened in the digital asset space since we last spoke about 1 year ago. Most recently, spot Bitcoin ETFs started trading here in the U.S. after the SEC approved 11 applications from asset managers, including BlackRock, WisdomTree, and Fidelity. So I'm wondering, what was your immediate reaction to that landmark decision? Did you see it coming? And what does it signal to you?
We certainly anticipated it, but obviously until it's finally approved, we never kind of expected, but it certainly was our expectation that it was going to happen. In terms of the actual kind of broader implication for the market, we're incredibly positive. And I think it's kind of a big seminal moment. There's been obviously a huge amount of focus, in the build up to this. And so actually seeing, big regulated institutions having that ability to issue Bitcoin ETFs is a very kind of powerful, I think, statement for the market. And I think while we might not see something kind of instant in terms of like some huge impact, I do think over the course of the year, we'll actually see the full impact of this as more investors actually come in to invest. What you're seeing at the moment is predominantly retail investors. As people now on the wealth management side, the institutions start to go through their governance process to be actively investing, I think we'll start to see a significant amount of investment from those particular parts of the industry. So yeah, we're very positive about the impact for this year. And I think as you think about 2022, where the sentiment was kind of filled with probably a lot of negativity for the most part, actually kind of having something that is really positive, I think is very good. And I think that extends more broadly across the digital asset ecosystem.
Now, Goldman Sachs actually came out with a report earlier this month outlining some of the benefits and drawbacks of these spot Bitcoin ETFs and, at the time, the potential approval of them. One of the benefits outlined in the report focused on institutional investors. Those benefits could include low management fees and investor protections afforded by these ETFs. What are some of the benefits that jump out at you?
Yeah, I think there too, as you kind of highlight, I think if you're investing pre the Bitcoin ETF, the actual cost was probably a little bit higher, and you saw the pressure amongst the asset managers in terms of even just pre-launch the pricing, and so people were driving down pricing, and the competition is very healthy. So yes, I think it's a more cost-efficient way to invest. I think the investor protections, particularly for wealth management and retail, are significant. And so that is something people really are quite focused on. But I think, in the context of the institutions, that ability to invest in a product that is institutional grade, obviously can trade on many different exchanges, I think is hugely powerful. And when you look at kind of the marketplace more broadly, we've got the Bitcoin halving, potential rate cuts, not clear when exactly. And then also you've got Ethereum upgrades. There's just a lot of positive news this year. So I do think, from an institutional perspective, the direction of travel is very positive.
And what about some of the drawbacks tied to these spot Bitcoin ETFs? According to that Goldman Sachs report I referenced earlier, they mention the fact that, crypto can be traded 24/7, but these investment vehicles are limited to market hours. What other drawbacks jump out at you?
I think that's, yeah, a very obvious one as well. And I think also, as we start to think about Bitcoin, if we do see, huge amounts of investment into these ETFs, there's obviously a scarcity of the underlying asset as well. So that's something we don't need to worry about today, but something to consider on the forward. And I think, for me, I think the positive aspect is the breadth of the market that it can focus on. So yes, the point around the market hours is one, obviously, from a trader's perspective, they need to be very cognizant of. But yeah, I think that would probably be the key ones.
Now, what does this approval mean for Goldman Sachs? I know that Goldman runs a team trading crypto derivatives for institutional clients. And I read that you mentioned that you have seen significant growth in client interest for crypto derivatives. So what else is changing as a result of these approvals?
I think it's a really good question. And I think for us, this ability to actually be kind of more actively involved in the US, with these products is actually kind of, from a crypto perspective, is very powerful. So we're, active on 7 of Bitcoin ETFs that have been approved as authorized participant, soon to be 8. Plus, we were already active across, kind of the US in the context of the futures ETF, but also, more broadly across the globe, we're active in market making with the ETPs and other type products. So I think for Goldman Sachs, it's great because we can be more active. And as I look at kind of the broader markets business, it's the business that focus on ETFs, the ones looking to not only facilitate client demand, but also on both an agency, but at a principal basis as well. So I think it creates kind of opportunity in that space for a cross section for our clients. And I think as we start to think, like I say, kind of the broader product suite, you start to think about other products that can kind of, follow on from that, like structured note products and other kind of, things like that.
I came across a CoinDesk article from January 3rd, which said that Goldman Sachs is in talks with Grayscale and BlackRock to play a key role of authorized participant for their ETFs. Where does that stand now, and are there any updates?
Yeah, well, we're actually authorized participant now on 7 of the Bitcoin ETFs that launched, one of which was the BlackRock and Grayscale as well. So we are very pleased to be able to, to play that role with those kind of issuers. Also, when you look more broadly, Fidelity and others, we're also active with it as well. It was important for us, our clients are very keen to be kind of active in these products. And so being able to act as authorized participant, which for those not familiar, that just enables you to be involved with the creation and the redemption of the Bitcoin fund units, ETF issuance certificates rather, which I think is kind of also an interesting point to mention. So had these products been kind of created and redeemed in kind, which means you'd have had to have kind of, been involved with the underlying asset, that would have been more difficult for us as an institution to be involved. But the fact that they were cash, create and redemption has meant that we have been involved. And so being able to work with, like the BlackRocks and others has been very important for us. So we're delighted to be.
You mentioned potentially soon to be 8. Are you at liberty to disclose what that 8th one might be?
No, I mean, it's just something we're going through our internal approvals with, that's all. But it's kind of, it would be kind of the obvious ones as part of that 8.
Interesting, and it will be very interesting to see what happens in that regard. But what do you think has changed since these spot ETFs started trading, specifically as it pertains to the perception of crypto?
It's an interesting question. Obviously, when they were issued, there was, a focus in and around, if you're an evangelist, you're kind of creating and using, the very kind of institutions that perhaps the whole creation of cryptocurrency was designed to navigate around. Personally, I think it's exceedingly positive because as we've seen, over the last 12, 18 months, the regulated institutions that are well capitalized, do have a very important role to play if you really do want to build out the crypto marketplace. And so allowing, the institutions, be it on the buy side and then the sell side, be it, as I said, to act as authorized participant to market make, is actually a big positive, I think, for the market more broadly. And then going back to one of the earlier points you made around the investor protections, that is obviously a big positive for, kind of a cross section of the market that perhaps weren't or a little hesitant to get back in. now recognize that this is an institutional grade product and they can comfortably get back involved into the marketplace. But I must emphasize, from our perspective, we're obviously more focused on the institutions and the wealth management businesses.
Now that these spot Bitcoin ETFs are trading, what do you think will happen with those applications for spot Ether ETFs?
I mean, a big question, obviously, kind of naturally centers around whether it's perceived to be, a security or not. And I think that will ultimately be determinant on whether it gets approved. I mean, there are different schools of thought, but, I think I personally remain positive that they will, but, we'll find out, I guess, over the course of the next few months.
Absolutely. And the SEC is due to make its first decision in May. So it's fast approaching.
Yes, it is. It really is, yeah.
But what do you think is next for crypto now that these spot ETFs are live? I know last time we spoke, you noted that you were optimistic about the acceleration of adoption. Do you think that's going to be amplified now that these spot ETFs are trading? For
crypto, I think it kind of goes back to one of the points I was talking about earlier. I think we'll start to see, a steady flow of investment into this space. I think, the BlackRocks and these funds have actually started to perform very well. You've started to see the asset under management grow. So I think we'll continue to see that. And as more people are approved to invest, I think that will be positive. I mean, you just need to look, when we spoke last time, Bitcoin was down 60%, I think, kind of year on year. If we actually look over the last 12 months, it's just shy of 100% up. So there's obviously been a lot of positive momentum, in terms of the asset class. There's been a little dip since obviously the Bitcoin ETFs have been issued, which I think is perhaps understandable, just given, a lot of the focus and hype around it. But as we start to see like the Bitcoin halving, as I mentioned, there are rate cuts and things, and we start to see people, really kind of allocate a certain portions of their portfolios into this space, I think that, is going to be a positive. And if you think about, is this market being institutionalized, just look at the amount that's open on the CME. The CME now has more open interest than any of the unregulated exchanges, which, is a big shift in terms of the dynamic, which really highlights the institutions, are looking and focused on this market. And some of the activity we see within the portfolio companies that we've invested specifically points to, some positive momentum there as well. So that's good.
Now, McDermott also outlines some key trends and predictions for digital assets in 2024. Plus, he reveals how many crypto companies the bank currently has in its portfolio and explains how Goldman Sachs' digital assets business operates amid an evolving regulatory environment. You'll be able to check out the full interview over at cnbc.com/cryptoworld. Okay, that's all for today, but we'll be back again tomorrow, and we'll see you then.